The highly anticipated Q3 earnings release from UnitedHealth just dropped, and while some of it was expected, there are a few developments that caught investor attention. So as a CPA, I'll break it all down, and if you enjoyed the video, drop a thumbs up and subscribe to the channel. So with that, let's jump right in. Adjusted EPS came in at $2.92 per share, beating analyst expectations by over 11 cents. Given everything that's been going on, a beat in the earnings is something we want to hear. On the revenue side, things looked more promising. Q3 revenue reached $113.2 billion, up roughly 12% year over year, driven by continued growth in both the UnitedHealthcare and Optum segments. It's good to see top-line growth, but the problem is that rising costs are eating into profits. Earnings from operations fell to $4.3 billion this quarter, down from $5.2 billion in the prior quarter. And that decline speaks to the shrinking margins the company is currently dealing with, as net margin came in at 2.1%, compared to 3.1% in the prior quarter. Now in Q3 of 2025, UnitedHealth Group reported a Medicaid medical care ratio of 89.9%, consistent with expectations, but still reflecting elevated medical cost trends and higher member acuity. Now, what is the MCR? Well, essentially, for every $1 of premium collected, 89.9 cents go towards direct medical care costs for that individual. Now, the company noted that the state reimbursement rates have not fully kept pace with these cost pressures, resulting in limited margin improvement and a roughly break-even performance for Medicaid segment thus far. Now, management emphasized that the rate and cost imbalance is expected to continue into 2026, making Medicaid a key near-term challenge for profitability. Now, rather than diving too deep into every financial line item, the bigger question for investors is, where does UnitedHealth go from here? Since the earnings release, the stock is trading relatively flat, being up only 0.5% for the day. Is this good or bad? I don't really have a straightforward answer. With a long-term horizon, I don't think that really matters, but the movement could also be due to the Fed's rate meeting tomorrow, which could send some volatility in the markets. From a valuation perspective, their current PE ratio is sitting at 19.2 versus their 10-year average of about 23.04. Based on this, I would say there's still some upside going strictly based off historical figures. Looking at the analyst expectations, the price targets are closing in near the stock price. I think once analysts digest UnitedHealth's Q3 report in the coming days, we can expect some upward revisions to these amounts. So if you've made it this far into the video and you're wondering what to do next, ask yourself two questions. Are you chasing short-term gains, or are you comfortable holding for the next 1.5 to 2 years for a possible 50 to 100% gain? Your answer could shape your strategy. Personally, I think the market's overreacting with everything that's been going on, and we've been seeing some positive news coming out of UnitedHealth over the last few months. So UNH is a giant in the healthcare space with all the resources, infrastructure, and expertise needed to navigate this rough patch and come out stronger. Now, if you enjoyed this quick earnings breakdown, don't forget to give the video a thumbs up and subscribe to the channel. Let me know in the comments what your game plan is with UNH, and thanks for watching. I'll see you in the next one.